#1 news network. And you're watching News 9. English news as it should be.
A very good morning. You are watching News 9, English news as it should be. And this is Morning Brief at 9. I'm Karthik Malhotra. And well, it's a short week, tomorrow being Holi. And it has been a positive note for the Indian economy. Inflation data came in yesterday showing that the inflation has cooled below 4%. It's not just India. Inflation in the US is also cooling down. Will that lift the sentiment on the markets? We will find out on the show today. But also on the show, we will try and understand the 3-month beating that equity mutual funds have taken. Is this pretty much the end of that trend? Feroze Azeez would be joining us on Morning Brief at 9. Stay tuned right here. This is Morning Brief at 9. First up, let's look at the headlines this morning. India's inflation cools to 3.61% in the month of February, coming bang in line with RBI's target of inflation below 4%. Does it give the Reserve Bank of India headroom to cut repo rate on the April 9th RBI's Monetary Policy Committee meet? And it's not just inflation. India's industrial output ticked up 5% for the month of January, driven by the buoyancy in the manufacturing sector. Factory output rose 5.5%. But on a day of good data, not the best data coming in on equity mutual funds. It has registered the 3rd month of slowdown in inflows. We'll try and understand, is this the end of the jinx period or are we yet to see the worst? Electronics, IT and Railway Minister Ashwini Vaishnav posted a welcome note for Starlink coming to India, but later deletes the post. And amid the tariff war initiated by US President Donald Trump, India's Steel Secretary says that tariffs on steel and aluminum won't impact India. Havish Agarwal-led Ola Electric is on an OPEX reduction drive. The new plan is set to cut as much as 90 crore rupees per month. Staying with electric vehicles, Tata Motors-owned Jaguar Land Rover says it won't make electric vehicles in India just as yet, citing price-quality imbalance. Meanwhile, global investment private equity firm Temasek is biting into India's Haldirams snack market. A $1 billion deal worth about 10% of Haldiram seems to be the final deal. And like we told you, inflation eases in the US. Wall Street lights up with joy. Will this have a cascading effect on the Indian markets this morning? We'll figure out once markets open at 9:15 a.m. Let's start with the top story this morning. Data that came in yesterday. Retail inflation in India has slipped sequentially to 3.61% in the month of February, driven by a decline in the rate of price rise in vegetables and protein-rich items. Now, hopes ride high on the Reserve Bank of India for a second reduction of interest rates next month. Let's look at the data which has come in. The Consumer Price Index or CPI-based retail inflation was at 4.26% in the month of Jan and 5.09% in the month of February last year. The year-on-year inflation rate for February 2025 was 3.75% as per data released by the National Statistics Office yesterday. Food inflation in February has been the lowest after May 2023. The NSO also said the significant decline in headline inflation and food inflation during February is mainly attributed to a decline in inflation of vegetables, egg, meat and fish, pulses and products, as well as milk and other dairy products. RBI, which has been mandated to ensure retail inflation remains at 4% with a plus minus 2% margin on either side, has reduced short-term lending repo rate by 25 basis points last month on easing concerns on the inflation front. Now, the central bank is scheduled to announce the next set of bi-monthly monetary policy on April 9th. It gives RBI enough headroom to go ahead with another rate cut. Let's look at some of the reactions which are coming in from industry leaders. Sanjay Nair, ASSOCHAM president, has said that the drop in CPI well below the RBI's target of 4% would not only boost consumer demand, but would also help reduce cost of production for India Inc. and result in improvement in corporate balance sheet. So cost of capital goes down, balance sheet of corporate India likely to swell positively. But ICRA chief economist Aditi Nair has a different view. She says the sequential uptick in vegetable inflation in March 2025 is likely to prevent a further softening in the food and beverages inflation print in the month, after substantial cooling seen over the past 4 months. And the good news is not just on the inflation front. Even the industrial production, India's IIP, rose by 5% in the month of Jan 2025, mainly due to good performance of the manufacturing sector. This again according to data released yesterday. The government also revised upward industrial growth figure to 3.5% for December 2024 from the provisional estimate of 3.2% released in the previous month. The factory output or manufacturing output measured in terms of the IIP or Index of Industrial Production rose by 4.2% in Jan 2024. The data released by the NSO showed that the manufacturing sector's output grew by 5.5% in Jan this year, up from 3.6% in the year-ago month. Now, mining production growth dipped to 4.4% from 6% year-on-year. Power output growth slowed to 2.4% in Jan 2025 from 5.6% a year ago. But in the April to Jan period of this year, the IIP grew just 4.2%, down from 6% recorded in the year ago period. And moving on to corporate and M&A stories. Singapore's state investment company Temasek has signed a deal to pick up close to a 10% stake in the snacks business of food chain Haldirams at a cost of about $1 billion. This as per a Reuters report. The deal was signed after months of negotiation. Temasek said it will not comment on market speculation regarding the signing. Temasek's stake purchase comes just over a week after private equity investor Blackstone pulled out of the race to acquire a minority stake in Haldirams, citing valuation concerns. Now, Haldirams, which started operations in 1937 with a tiny shop in the city of Bikaner in Rajasthan, is estimated by Euromonitor International to hold a near 13% share of India's $6.2 billion savory snacks market. And its snacks business has proved a tempting asset for many foreign investors. Singapore's Temasek, which has expanded its India footprint with investments in Manipal hospitals and KFC and Pizza Hut operator Devyani International, is now betting on the country's snack market with the stake in Haldirams. And moving on to India's homegrown electric two-wheeler startup Ola Electric, which said in a statement that it has successfully completed a company-wide initiative to reduce cost and improve customer experience. Now remember, Ola Electric had been under fire from customers across the board, citing servicing issues and issues with faulty parts taking forever to replace. Now, Network Transmission and OPEX Reduction Program, a company-wide initiative launched in November 2024 by Ola Electric, has delivered substantial cost reduction as per the company statement, amounting to as much as 90 crore rupees per month. Now, as a result of that, Ola Electric expects to achieve automotive segment EBITDA break-even for the next quarter, which is quarter 1 of FY26, April, May and June this year, with a financial impact of these initiatives beginning to fully reflect from the month of April. The program encompassed distribution network transformation, projects like shutting all regional warehouses and shipping vehicles, spare parts and accessories from the factory directly to stores. In addition to that, automating registration and other processes and productivity improvements in sales and service network, all contributing to what Ola suggests is likely to be a recovery of the Ola Electric market. Now, in addition to cost saving, the changes have resulted in reducing average vehicle inventory from around 35 days to 20 days, as well as reducing delivery time for customers from 12 days to just 3 to 4 days. Vehicle registration process transformation is in the final stages for Ola Electric, and the company's daily registrations have improved significantly, increasing to over 800 per day as per a company statement. And in news coming in just this morning, on occasion of Holi, Ola Electric is offering a discount of up to 26,000 rupees for its S1 models. And staying with the electric vehicle market segment, Tata Group owned UK luxury car maker Jaguar Land Rover has reportedly shelved its plans to make electric cars at Tata Motors' upcoming billion-dollar factory in India. Now, as per a Reuters report, the car maker was unable to find the right price-quality balance for locally sourced EV parts, while adding that decision also reflects the slowing demand for electric vehicles. Now, as per the Reuters report, JLR's decision is also expected to delay plans for Tata Passenger Electric Mobility, Tata Group's local electric car, to launch in the first of its premium Avinya models. Remember, Tata began construction of its new factory in September last year. The plant was slated to produce over 250,000 cars a year once it reached its full capacity in about 5 to 7 years. This was to include as many as 70,000 Jaguar Land Rover electric cars. Now, right now, JLR has most of its production in Britain, Europe and China, but it assembles some of its Range Rover SUVs in Tata's Pune plant. And JLR's manufacturing of electric vehicles may not be coming to India, but what we believed until yesterday and hopefully still continues to be true is that Elon Musk-led Starlink is coming to India in a partnership with Jio and Airtel. But in a strange turn of events, Union Minister Ashwini Vaishnav welcomed Elon Musk's Starlink to India and said it will help railway projects in remote areas of the country, but later deleted his tweet. The now deleted tweet on social media platform X had originally read, "Starlink, welcome to India, will be useful for remote area railway projects." Vaishnav's comments, now deleted, follow two separate deals with Mukesh Ambani's Jio platform and Sunil Bharti Mittal's Bharti Airtel struck by SpaceX, the aerospace company led by Musk, to bring Starlink's broadband internet services to India. The two deals follow months of bickering over how Musk's venture should be granted spectrum rights. Over the past few months, rivals Jio and Airtel had come together to demand an auction for awarding spectrum for satellite services in India, as they feared an administrative allocation of spectrum would give Musk Airways at a price lower than what they had paid via auctions in the past for their own networks. Jio is likely to offer Starlink equipment in retail outlets and online stores, and also customer support, installation and activation on devices. Jio and SpaceX will also explore how they can boost each other's offerings. Starlink is the world's largest low Earth orbit or LEO constellation operated by Elon Musk's SpaceX. On Tuesday, a day before Jio announced its deal signing with Starlink, Bharti Airtel announced that it is entering into an agreement with SpaceX to bring Starlink's high-speed internet services to India on a non-exclusive basis. Bharti already partners with Eutelsat, OneWeb and second largest LEO constellation. Similarly, Geo Platforms has a joint venture with SES, another leading global satellite-based content connectivity solutions provider. Starlink can help Bharti and Jio provide connectivity to previously unserved areas, especially areas currently with limited or no internet coverage. The deals by Airtel and Jio come weeks after Prime Minister Narendra Modi met Elon Musk, seen as very close to US President Donald Trump, in Washington to discuss issues including space, mobility, technology and innovation. Musk was in the, Modi was in the US to meet Trump, who in his second term as the US president upped the ratchet on tariffs against various countries, including India. The curious question now emerges: why did Minister Ashwini Vaishnav delete the post welcoming Elon Musk's Starlink to India? Could this be another twist in the tale when Elon Musk decides at the last moment to pull out of his India plans, exactly as he had done about a year back when he was slated to visit India and launch the Tesla vehicles in the country? Well, time for a quick break right here on Morning Brief at 9. But coming up on the other side of the break, we will have Feroze Azeez with us, who tells us not just the mood of the markets as they open just now, but also is the trend of 3 months of slowdown in equity mutual fund inflows finally over? All that and more on the other side. You're watching Morning Brief at 9.
Does it take to be the greatest in the world? There is one thing which truly sets you apart: your inner strength. Suryadev TMT Reebok, true inner strength.
What is to the nines? In literal terms, it's perfection. But to us, it's not just a phrase, it's an attitude. One that starts at your desk and sends a statement to the world. To the nines is about taking charge. It's a way of life where every seam, every fold, is crafted with excellence. It's timeless elegance and uncompromising quality made for the corner office. It's the ideas that inspire redefining order and elevating the tabletop. To the nines, for the leaders of today and the visionaries of tomorrow.
Every brand tells a story, and they are the storytellers, the Sutradhars. They present a brand with band, baja and barat to you. They are the Brandwalas.
It's not the fiefdom of politicians. They owe it to the people. Matter is now more about faith of the millions of devotees than just political slugfest. Does that mean that I can't get a job in Chennai, although I may be best suited for that particular job? They have more civic sense, they have more of civility than all these men. My name is Sudha Sadanand. Welcome to the South Indian.
We made history for a reason tonight.
Will it change the shape of American foreign policy? Violence has erupted in Manipur once again. How can we pass judgment, sir, before any inquiry that, they were volunteers or militants, sir?
Light, camera, and action. Kick back, relax, grab your favorite snack because News 9 is here with your weekend dose of entertainment. It's time to take a deeper dive into the buzzworthy happenings of the entertainment world. From celebrity gossips to exclusive conversations, from nostalgic moments to News 9's pick of the week. Don't worry, we've got you covered here. And I hope you've grabbed your popcorn by now because News 9's page 3 is here to serve you everything that we call entertainment. So do stay tuned every Saturday and Sunday, 2:30 p.m.
Welcome back. You're watching Morning Brief at 9. Let's quickly look at the mood of the WALLSTREET as it opens this Thursday morning. Remember, this is the last day of trading for this week. Tomorrow being Holi, markets are going to be closed and it seems to be a positive start, a gap up opening for the markets this morning. Nifty 50 up about 0.16%, now above 22,500 mark. Sensex on the other hand is up even higher, 0.2% as markets opened at 9:15 a.m. Holding well above the 74,100 mark. Remember, trade is choppy, markets are choppy. There are enough and more cues coming on the positive side, the favorable side, whether it is India's inflation or industrial output print that came out yesterday and signals that the Reserve Bank of India, given that inflation has come below the 4% mark, is well within its own estimates, able to cut interest rates for the second time this year, next month, as the RBI Monetary Policy Committee meet starts on April 9th. Meanwhile, the small cap and the mid cap space is also seeing some positive action. Both the indices up about 0.3% in trade this morning, and volatility in India also seems a little higher at about 13.78. Let's quickly look at the Nifty 50 heat map and try and make sense of which are the stocks and which are the sectors which are in action today. Well, the market started well on the IT space. Well, Wipro is now a little bit in the red, but overall markets reacting, especially the IT sector stocks reacting favorably perhaps to inflation print in the US, which came in at 2.8%, and that saw an upswing in the Wall Street indices yesterday. That rub off reflecting on IT stocks this morning. The auto sector seems majorly impacted today. M&M is down about 1%, and so are pretty much all other consumer durable stocks. Tata Steel is up about 1.18%. Presumably this comes on account of Steel Secretary saying that tariffs imposed by the US are likely to have absolutely no impact on India's steel sector. Well, we have with us Feroze Azeez, Deputy CEO, Anand Rathi Wealth, joining us this morning. Feroze, good morning. Thank you so much for taking out time on the last trading day of the week, tomorrow being Holi. What do you make of the market mood this morning?
Karthik, good morning. I think the market mood, to my mind, is a little more of a stalemate kind of a mode. Okay. Like you've seen in the last couple of years, markets always start with a no direction kind of start point more often than not. Earlier, there used to be gap ups and gap down. Those are things of the past. So I personally think it is quite beginning to the day, and I think the direction would be derived out of the small and mid cap spaces movement, which will happen after the large entities start their counters at about 9:45-10.
All right. Well, I was hoping, in fact, Feroze, that markets would maybe have a positive start, a more positive start than what we are seeing on the charts, simply because inflation data came in pretty strong yesterday. Inflation cooling to 3.6%. Had markets priced that in already?
Yes, I think inflation was definitely priced in, and I think when you're looking at that kind of selling, which is unbattered selling from FIIs, these good news will only get factored in largely. Of course, a partial part of its coming lower was already factored in, and when the sentiment of sale is extensive, good news don't get priced in till things settle. So I think you will get this actual benefit of this kind of a cool off in about 8-10 days time.
All right. Well, we will wait for the actual impact of the cooling off of inflation. But from what is happening from geopolitics to geoeconomics and Trump tariffs and this constant flip-flop, again, are markets really completely now aware there are no more shocks that are likely to hit the markets, and the journey from here is likely to only settle down before it starts inching up, Feroze, to your mind?
Karthik, I think I see this market over the last couple of months has completely divided. One is Nifty. I personally think Nifty's bottom was 4th June 2024 on the election day, where on the closing basis we were 21,885. It's unlikely that in this financial year we will reach that number again on Nifty. That's quite likely we still have about 11, 12 trading sessions for this financial year. I think that will be the rock bottom for Nifty. Of course, markets, if there are new surprises, of course, can reach that level. I'm speaking about odds of 80, 90%. That's point one. Because Bank Nifty, FIIs have started longing Bank Nifty futures. If you see last 2-3 days data, you're seeing 700-800 crores of long, which happened on March 4th, 5th. When FII starts longing in the largest weight in the form of a thematic index, you know that Nifty has started getting some support. Then coming to the broader market, there is some stocks, almost about 70-80 stocks in the small cap 250 will take its own sweet time to earn back the shareholder confidence. So firstly, the FIIs sell, and then the deeper pockets FIIs sell, then the domestic institution sells, and then the retail loses hope. And then once it loses hope on account of revival of that is a grinding period of at least a year, year and a half. So there is 60-70 stocks like that. And there is a Nifty, which I think is going to be very resilient.
All right. And let's talk about the investors coming to a grinding halt, or hopefully not. And let's look at that in the context of data released by AMFI yesterday, Feroze. And I just want to get your views on what exactly do you make of the data, because we saw that inflow into equity mutual fund dropped 26% to about 29,300 crore rupees in the month of February. And this was primarily due to a significant decline in investments in the small and mid caps schemes. And obviously this is the sector which was most volatile and had been hit the most. Now this is the second consecutive month of decline in inflows in equity funds. So what is your initial reaction to the data which is coming in on this 3 months of decline that we are seeing in equity mutual funds?
Yes, Karthik, how I see this data is a very, very promising data. One way to see it is it has declined. Why I would not be overly optimistic in saying what I'm going to say. If 30,000 crores of net flow has happened, first check I do is it greater than the SIP collection, gross collection? 26,000 crores is the SIP collection, and your net flow is greater than that SIP, which is 30,000 crores. So that's 4,000 crores of net flow, even in lump sum. If you were to segregate this, that's a very good sign. Why do I call it as a very good sign in spite of it coming down from 50-odd thousand to almost about 40-odd thousand to almost about 30,000 in a successive month? Why do I call it positive? Now I have to take it into a balance of a COVID time period. You'll be surprised, there were almost 9 to 10 months of FY21, the net flow was almost negative in spite of the SIP number being positive. Small cap also having 3,700 crores of net flow, that's one positive sign. Second, SIP numbers being lower than the net flow is a great sign. Third, in extreme situations, the last time you saw extensive outflows in small cap and general lump sum amounts were going out. That has not happened yet, and it is shocking me with this kind of carnage. If this kind of maturity retail and mutual fund investors are showing, it's unprecedented for sure if you go mathematical.
Okay, so let's look at that data and let's look at, in fact, the small cap and the mid cap carnage that you're talking about. And there's been obviously, a massive decline that we are seeing in both these indices. So 3,400 crore rupees versus 3,700 crore rupees in February, compared to about 5,100 crore and 5,700 crore rupees. This seems like carnage enough. Were you expecting a bigger sort of hit and lower inflows in these two segments, Feroze?
Yes, Karthik. See, what happens is there are some numbers which can go into negative zone. We have to remember that the equilibrium is not 5,000 crores. It's not just a zero number. And if there is 3 lakh crores, 2 lakh crores in SIP, in small cap funds, there could also be a minus 20,000 crores. That's what FIIs are being negative. Are you saying that if FIIs added some money in the small cap, would you see it so negatively? Similarly, if you look at DII getting money, not zero money, but they're getting 3,700 crores, which is the third highest for the last financial year. If that's not a shocker, because there are some numbers which stop at zero, right? But there are some numbers which could have also been minus 30,000 crores, minus 2 lakh crores, hypothetically, if everybody had to redeem their small cap money. So I see 3,700 crores as not a number which is greater than zero, because this number is a negative integer possibility.
All right. And let's talk about thematic funds. And thematic funds have in fact witnessed the highest net inflow. You were talking about Bank Nifty, Feroze. That I understand is where FIIs are likely to park their money going forward. But the thematic funds receiving inflows of about 5,700 crore rupees, followed by flexi cap funds which got about 5,100 odd crore rupees. Are these what do these signs tell you? That is this foreign institutional money which is very, very focused on certain sectors, or again is this retail participation that you're seeing?
I think whenever markets get divided a little, some portion being very attractive, some portion being absolutely ridiculously overvalued, thematic takes a front seat. That's what has happened, right? You have some sectors like banking. It's at 3-year lower P's or PBs, price to book. Also, it's 3-year lower than 1 sigma lower than the 3-year, 4-year means and medians. So I think whenever the market is very divergent, people become more picky of what portion of the market they wanting to buy. Large cap and thematic will get precedence because there's not the entire market is attractive. In 2021, the full market was attractive. So that's why you see flexi cap, which is a quasi large cap one, and thematic getting inflows. I think that's because that's a message that market is not finding, the investors are not finding the full market attractive, but are trying to cherry pick what they wish to buy in the current situation.
All right, cherry picking, but cherry picking definitely not happening in debt mutual funds because they have seen the biggest sort of outflow, in recent times. So ultra short duration funds, for example, saw outflow of about 4,300 crore rupees, and money market funds saw again an outflow, minor outflow, 300 crore rupees, but an outflow nonetheless. So on the debt mutual fund side and on debt instruments per se, why is the tide turning bearish at this moment, Feroze?
I think if I have to tell you from a large trend perspective, the last quarter, generally most corporates who are the largest portions of AUM owners, not in terms of number, but the large portion of the assets in liquids, ultra short funds, short-term bond funds, all comes from corporates. And the last quarter, especially February, March, is going to be something where they would want to have more liquidity than have investments. So this is precisely why they hold it in debt, not even long-term debt, which they intend to hold more beyond 2 years. Now that tax benefit has also disappeared because of Section 50AA. So individuals are not attracted to it. So working capital limits are being parked in these funds, but they get more or less utilized during the faggot.
Right. And finally, I think the big headline number, the asset under management AUMs are down about 4% to about 64 lakh crore rupees. This as compared to 67.2 lakh crore rupees. So an overall reduction in AUM size of about, give or take, 2.5-3 lakh crore rupees. Is this primarily because prices came down and hence obviously the size of the asset reduces? I doubt this has anything to do with too many SIPs stopping and people withdrawing money. What do you think of this number?
No, because the AUM is a summation of last month's AUM plus or minus net flow plus or minus mark to market. Net flow is positive, so the full reduction is attributed to mark to market. If mark to market is negative, which is I think I'm so happy that in a carnage where NSE 500 falls 7-8% and the mutual fund AUM falls 4%.
Right.
I think that speaks volumes about the risk management which gets respected during times like these. I was seeing the worst hit flexi cap fund is 22% down from 1st of January. Worst hit stock in NSE 500 is down 47%. Worst hit small cap fund is 23% down from 1st of January, not the February data. So when you look at mutual funds during downturns like these, the drawdowns are so muted relative to the stock owners, which I see stock portfolios, that it becomes easier to sail through the short term, and most stock investors are panicking and actually booking their losses and making them actual full-time permanent losses. Mutual fund guys are of course not able to sleep easy, but they're still not redeeming the money and making that paper loss to an actual loss.
Right. So before I let you go, Feroze, final advice to retail investors watching our show, listening to you with bated breath. What is your one-line advice to them in this market, in these turbulent, volatile, geopolitical, geo-economic times? What should be the strategy of a retail investor?
If you have anything greater than 40-50%, 50% in small cap, move to large cap. Their bottom formation is very, very apparent.
All right, Feroze, we will leave it at that. Thank you so much for joining us this morning on Morning Brief at 9. Pleasure having you as always. Well, before we slip into a break, let's quickly look at other global stories making news this morning. Canada and the European Union retaliate against US steel and aluminum tariffs with sweeping trade measures escalating tensions in the global market. US President Donald Trump threatens new tariffs on European Union as Canada and EU retaliate against US steel and aluminum trade barriers. US inflation cools more than expected in February, giving the Fed room to hold rates steady, but Trump's tariffs could push prices higher in the months ahead. Wall Street bounces back as cooling inflation raises Fed rate cut hopes, but trade tensions and government shutdown risks limit gains. Ukraine President Volodymyr Zelensky says Ukraine open to US proposed ceasefire if Russia agrees, as Moscow seeks more details, while Washington wants Kremlin's response will reveal true intentions. Greenland's pro-business Democratic Party wins parliamentary election, defeating the incumbent left-wing coalition as US President Donald Trump's push to take control of the Arctic island adds to geopolitical tensions. Intel shares surge as reports reveal Taiwan's TSMC's proposal for a joint venture to operate its foundry division with Nvidia, AMD and Broadcom among the stakeholders amid US efforts to revive domestic chip making. German luxury car maker Porsche warns that 2025 earnings could take a hit due to large-scale restructuring, rising trade tensions and increasing competition in China, even before factoring in higher US tariffs on EU imports. And Zara owner Inditex shares plunge over 8% as sales growth slows, raising concerns about weaker consumer demand and future expansion plans. These stories on the other side. You're watching Morning Brief at 9.
What is to the nines? In literal terms, it's perfection. But to us, it's not just a phrase, it's an attitude. One that starts at your desk and sends a statement to the world. To the nines is about taking charge. It's a way of life where every seam, every fold, is crafted with excellence. It's timeless elegance and uncompromising quality made for the corner office. It's the ideas that inspire redefining order and elevating the tabletop. To the nines, for the leaders of today and the visionaries of tomorrow.
Every brand tells a story. And they are the storytellers. The Sutradhars. They present a brand with band, baja and barat to you. They are the Brandwalas.
You work too hard. Work smart like me.
Why? Won a lottery, is it?
You can say so. I'm investing in a great scheme in the share market. High returns guaranteed.
Your high returns aren't Karan Arjun for them to definitely come to you.
Meaning?
That there's risk involved in the share market. Nobody can promise guaranteed high returns. It's illegal to do so.
Really?
Yeah.
सोच कर, समझ कर, invest कर.
Welcome back. You're watching Morning Brief at 9. Let's look at some global stories making news this morning. In a retaliatory move, Canada has hit back against US trade restrictions with a massive 29.8 billion Canadian dollar set to take effect Thursday morning, which is today. Finance Minister Dominic LeBlanc made the announcement just hours after US President Donald Trump's increased tariffs on steel and aluminum went into force. Canada, the largest foreign supplier of steel and aluminum to the US, is targeting billions in American imports. 12.6 billion Canadian dollars in steel and 3 billion Canadian dollars in aluminum, and altogether amounting to about 14.2 billion Canadian dollars in goods like computers and sports equipment. The move comes at a crucial time as Prime Minister Justin Trudeau prepares to step aside for Mark Carney, who recently won the Liberal leadership race. Listen in.
As of this morning, the United States is applying a 25% tariff on imports of...
Today, I am announcing that the Government of Canada, following a dollar-for-dollar approach, will be imposing, as of 12:01 a.m. tomorrow, March 13th, 2025, 25% reciprocal tariffs on an additional $29.8 billion of imports from the United States. This includes steel products worth $12.6 billion and aluminum products worth $3 billion, as well as additional imported U.S. goods worth $14.2 billion for a total of $29.8 billion. The list of additional products affected by counter tariffs includes computers, sports equipment, and cast iron products as examples. These tariffs are in addition to Canada's 25% counter tariffs on $30 billion of imports from the United States in response to U.S. tariffs put in place on March 4th.
The only constant in this unjustified and unjustifiable trade war seems to be President Trump's talks of annexing our country through economic coercion. Yesterday, he called our border a fictional line and repeated his disrespectful 51st state rhetoric. Well, Canadians have made it very clear that we will not back down and we will not give in to this coercion.
It's not just Canada, even the European Union has hit back in the escalating trade war with the United States. Brussels has announced $28 billion in counter tariffs on American goods that is set to roll out next month in response to US President Trump's sweeping steel and aluminum tariffs. European Commissioner Chief Ursula von der Leyen called the move strong but proportionate, insisting the EU must protect its business and consumers. Listen in to Ursula von der Leyen.
As of this morning, the United States is applying a 25% tariff on imports of steel and aluminum. We deeply regret this measure. Tariffs are taxes. They are bad for business and worse for consumers. They are disrupting supply chains. They bring uncertainty for the economy. Jobs are at stake. Prices up. Nobody needs that. On both sides, neither in the European Union nor in the United States. The European Union must act to protect consumers and business. The countermeasures we take today are strong but proportionate. As the United States are applying tariffs worth $28 billion, we are responding with countermeasures worth 26 billion euros. This matches the economic scope of the tariffs of the United States.
Now, even as European Union and Canada retaliate against Donald Trump's 25% tariffs on all steel and aluminum imports, President Trump has once again threatened to impose more tariffs on EU goods, escalating tensions with one of America's biggest trading partners. Take a look.
We have been abused really for a long time, and we will be abused no longer.
President Donald Trump on Wednesday threatened to escalate the global trade war with new tariffs on trading partners.
More tariffs on the EU. Will you respond to their retaliation?
Of course I'm going to respond.
That's after the European Union and Canada retaliated against his 25% tariffs on all steel and aluminum imports.
The European Union treats us very badly.
During a meeting with the Prime Minister of Ireland, Trump said it was among the countries abusing the United States.
The EU was set up in order to take advantage of the United States.
Including Ireland? Is Ireland taking advantage of the US?
Of course they are.
Canada, the biggest foreign supplier of steel and aluminum to the United States, announced its retaliatory tariffs on billions of dollars of U.S. products starting Thursday.
We will not stand idly by while our iconic steel and aluminum industries are being unfairly targeted.
Canada's Finance Minister, Dominic LeBlanc, said it was a dollar-for-dollar approach.
25% reciprocal tariffs on an additional $29.8 billion of imports from the United States. These tariffs are in addition to Canada's 25% counter tariffs on $30 billion of imports from the United States in response to U.S. tariffs put in place on March 4th.
The EU's countermeasures are due to take effect next month, targeting up to $28 billion worth of U.S. goods.
Meanwhile, India's Steel Secretary said that the industry does not see a major impact from tariffs imposed by US President Donald Trump on steel imports as they do not export much steel to the country. I quote, "To US we export less than 1 lakh metric tons," Sandeep Pundarik told reporters on the sidelines of an event in New Delhi. Trump's increased tariffs on all U.S. steel and aluminum imports took effect on Wednesday, stepping up a campaign to reorder global trade norms in favor of the United States. But it's not all tariff gloom in the US. A slight breather on US inflation for now as the consumer prices rose less than expected in the month of February, offering temporary relief for consumers. But experts warn that this may not last. With President Donald Trump's aggressive tariffs driving up import costs, the price of everyday goods in the US is expected to rise in coming months. More details in this report.
The latest U.S. inflation data showed prices cooled more than expected in February, giving the Federal Reserve room to keep interest rates unchanged at its policy meeting next week. The Consumer Price Index, released by the Labor Department on Wednesday, rose 0.2% last month, slightly below what economists polled by Reuters had forecast. That put the annual inflation rate through February at 2.8%, down from 3% in January. Sam Stovall is chief investment strategist at CFRA Research.
Looking at today's CPI report, I think investors are breathing a sigh of relief as it relates, first off, to the Consumer Price Index, since all four measures posted better than expected results. Stagflation is something that investors have been worried about, indicating that growth might slow, but inflation would stay sticky. This report, I think, goes a long way to ruling out the possibility of stagflation. However, recession is another matter.
Financial markets have been roiled by a cascade of tariffs imposed by President Donald Trump, and investors are increasingly concerned they could potentially trigger a recession. The relief offered by Wednesday's CPI report could be temporary, as the data did not capture Trump's tariffs, which has caused a surge in consumers' inflation expectations and prompted economists to upgrade their inflation forecasts. Goldman Sachs now estimates that another measure of inflation, the Core Personal Consumption Expenditures Price Index, closely looked at by the Fed, will tick up to around 3% by the end of the year.
Well, at least Wall Street saw some respite on Wednesday as lower than expected inflation eased investor worries and halted a sharp sell-off. The S&P 500 gained 0.5% while the Nasdaq jumped more than 1.2%. But despite the rebound, as markets continue to remain on the edge, the big question remains: how much longer can stocks hold their ground amid rising trade tensions? Take a look.
U.S. stocks bounced back on Wednesday, with only the Dow closing lower by 0.2%, while the S&P 500 gained 0.5% and the Nasdaq added more than 1.2%. Fresh inflation data from the Labor Department showed consumer prices cooled more than expected in February, keeping hopes alive that the Federal Reserve could cut its key interest rate this year. Jason Brown is president of Alexis Investment Partners.
I mean, the boost in the market today is largely because of less severe inflationary report. And so therefore some hope that the Fed put is kind of coming back alive. And we've seen some evidence of that lately. I mean, the market's been in a correction. It's been due for a bounce. It's almost looking for any excuse to try to find its footing. Whether this is the start of a recovery, however, is a little bit premature to know.
Gains were kept in check by the escalation of President Donald Trump's chaotic multi-front tariff war, which has sparked fears of a recession. Meanwhile, lawmakers on Capitol Hill continue to wrangle over a stopgap spending bill in an effort to avoid a government shutdown, adding further uncertainties to the mix. Stocks on the move Wednesday included Intel, which closed up 4.5% before soaring another 12% in extended trading after the company named respected semiconductor industry veteran Lip-Bu Tan as its new CEO. He replaces company veteran Pat Gelsinger, who was ousted more than 3 months ago. And shares of PepsiCo fell more than 2.5% after brokerage Jefferies downgraded its rating on the stock to hold from buy.
All right, let's move on. In a major development coming in this morning on the Russia-Ukraine war, Moscow said that it is waiting for details from Washington on the proposed 30-day ceasefire before giving its response. It said U.S. Secretary of State Marco Rubio said that Russia's reaction will reveal its true intentions. Meanwhile, Ukraine President Volodymyr Zelensky has expressed hope that if Russia agrees, the truce could be used to negotiate a lasting peace deal. Meanwhile, Russia has presented the U.S. with a list of demands for a deal to end its war against Ukraine and reset relations with Washington, according to sources. It is not clear yet what exactly Moscow included on its list or whether it is willing to engage in peace talks with Kyiv prior to their acceptance. More details in this report.
Ukrainian President Volodymyr Zelensky on Wednesday said he hoped that if Russia were to accept an immediate ceasefire proposed by the U.S., the two sides could use the 30-day truce to draft a comprehensive peace plan. But so far, Moscow has said it is waiting for more information about the proposal unveiled a day ago.
But as far as the Russian reaction to it, that's really the question here.
U.S. Secretary of State Marco Rubio said that response to the proposal would say a great deal about Russia's aims.
If their response is yes, then we know we've made real progress and there's a real chance of peace. If their response is no, it would be highly unfortunate and it would make their intentions clear.
Rubio announced the outlines of the proposal a day ago after more than 8 hours of discussions with Ukrainian officials in Saudi Arabia. Russian President Vladimir Putin has repeatedly said a short-term truce is not the way to end the war. Ukraine has also long said it rejected a short-term ceasefire unless it included the withdrawal of Russian forces from territory seized, warning that Moscow could use a lull in the fighting to reposition its troops for future offensives. Kyiv seemed to relent on that front Tuesday in a possible sign of improved ties with Washington after an Oval Office shouting match between Zelensky and President Donald Trump on February 28th.
You're gambling with World War III.
Trump subsequently cut off military support and the sharing of crucial intelligence. But on Wednesday, he sounded a positive note with reporters.
We have to see, it's up to Russia now. But we've had a good relationship with both parties, actually.
And his administration said military aid and intelligence sharing with Kyiv had resumed. Ukrainian troops this week appeared on the point of losing their hard-won foothold inside Russia's Kursk region. Russia's unprovoked invasion of Ukraine in early 2022 has left hundreds of thousands of dead and injured, displaced millions of people, reduced towns to rubble, and triggered the biggest confrontation between Moscow and the West in 6 decades.
All right, moving on to Greenland now. Greenland's pro-business opposition party, Demokratiet, has won the highly anticipated parliamentary election, defeating the incumbent left-wing coalition. The vote was largely due to US President Donald Trump's controversial pledge to take control of the island, a move that sparked international debate. Here's more.
Greenland's pro-business opposition party won Tuesday's closely watched parliamentary election. Demokratiet beat out the incumbent left-wing coalition in a vote overshadowed by U.S. President Donald Trump's pledge to take control of the island, a semi-autonomous territory of Denmark. Democratic finished just over 5 points ahead of the opposition Nalarak party with nearly 30% of the vote. The former favors a slow approach to independence from Denmark, while the latter has pushed for a rapid break. Democratic's leader Jens Frederik Nielsen told reporters that, quote, "We don't want independence tomorrow. We want a good foundation." Now the party will try to form a governing coalition, says Democratic lawmaker Anna Wangenheim.
I'm overwhelmed and I'm very, very, very happy. Very happy. Our main focus will be the politics we've been elected for. Then we will have to talk to the other parties where they stand.
Greenland's population of just 57,000 has been caught up in a geopolitical race for dominance in the Arctic. Melting ice caps are making Arctic resources more accessible and opening new shipping routes. Both Russia and China have intensified military activity in the region. Since taking office in January, Trump has vowed to make the vast mineral-rich island part of the United States, saying it is vital to U.S. security interests.
One way or the other, we're going to get it.
Many Greenlanders were alarmed when Trump initially declined to rule out military force to take control of the territory, although he later softened his stance, saying he would respect the will of the local people and was ready to invest billions of dollars if they joined the U.S. That idea has been rejected by most Greenlanders. And on Monday, in the final debate before the election, leaders of the 5 parties currently in parliament unanimously said they did not trust the U.S. president. Meanwhile, Denmark's prime minister has said Greenland is not for sale, but made it clear that it is up to the local people to decide their future.
Well, that's all we have for you on this edition of Morning Brief at 9. We will see you again on Monday. But remember, news continues right here on News 9. Thank you very much for watching.
Close to 600 million out of the 1.4 billion in our country who are under the age of 25, and 65% of our population is under 35.
We all know that if you have a choice of pilot at Air India, and one has read the book, the other one has saw the TikTok movie, and the third one has went through a simulator wins, right?
The employable youth is only increasing. We are one